Victor, how are you?
Yes, not bad. Yes, well, yes, this
Uh, so
yes, no,
you've heard,
y-
I'm sure you know. So you've seen basically China leading in AI,
yeah,
China leading in fusion reactors,
yeah,
China leading in hypersonics, China leading, and now
uh,
one of the points that Sean says is, China's economy is actually doing well. After all these days, all the time, like China is collapsing, China is dead, China
Good
is
morning,
well,
whatever.
everybody. Good morning, everybody. Jack Ma is back in the house. China is booming again. Uh, Welcome to the Daily Energy Markets podcast. It is February the 17th, and we have Brent crude oil stuck on a rock, if you like, a barnacle on a rock here. Brent crude oil trading at 74.91, up a few pennies in early trade this morning in Asia. Let's kick off with Omar Najia, Global Head of Derivatives at BB Energy. Omar, what do you think is going to be have the greatest impact, if you like, on the direction of travel here of the oil markets in the sort of the remainder of Q1? Is it big noise, the geopolitics that we're hearing all about? Obviously, OPEC plus policy about to be announced for the second quarter, sanctions. What do you think is going to direct travel here? China, as you just mentioned, China's still in the house.
I think if you, I mean, the thing about sanctions, it looks very clear that Russia and the US are going to make a deal. So sanctions over time are going to disappear. That's one thing for certain. There's no, the other thing is that oil, with OPEC plus curtailing supply and all this kind of stuff. And so it's extremely interesting. So you've got two kinds of major forces. You've got geopolitically, the risk is off. So no risk about Iran war, no risk about any kind of war, more like, peace and all this kind of stuff. And the Trump administration that needs oil prices down because oil makes everything, right? Oil is a major input to economies. So if oil prices are low, then you kind of mitigate inflation and you manage to push up economic activity. So that's one. On the other hand, oil, I think, basically has been trading sideways for a couple of years now, and with everything, with every other asset wanting to rally. So look at the S&P. They keep saying like, inflation was hot, and I don't know, and they might not cut, and all the rest of it, and we're going to fall. And what happens? It rises because the S&P is reflecting inflation numbers. So the S&P wants to go up, gold is legging it, risk assets are going up, inflation is quite running hot, 3%, I don't know what, blah, blah, blah. So everything wants to go to the upside because you've got, and the dollar, what's happening to the dollar? It's falling. Who would have thought the dollar's breaking its, hit a stone wall and is coming off. So with all that kind of stuff, oil is the only asset which is quote unquote pressured. How long that stays is going to be very interesting because it's been unable to. So if you look at Brent's trading about 74 something 75, it really needs to move above 76.50 to get any traction to the upside. And it really needs to move below 70 to start breaking down. Now, either of those is acceptable, but what it keeps doing is trading in a narrower and narrower and narrower range. At some point, it's going to break up higher or lower, but it's just been kind of, coiling smaller and smaller and smaller and smaller moves. At some point, it's going to have to decide which way it's going. And if you ask me, I don't know.
Mehmet Aguchu, Group CEO, Global Resources Partnership, and Chairman of the London Energy Club. Mehmet, there's a lot of geopolitics to talk about this Monday morning after the weekend. Let's start with the Ukraine, Russia's invasion of Ukraine, and we have the sort of first peace negotiators, if you want to call them that, deal makers be about to gather in Saudi Arabia. We have the president of Ukraine traveling the Gulf region this morning. Your thoughts on where that is going to go?
Well, first of all, I have to emphasize that it is amazing to see that there is going to be a Russia-Ukraine deal without Ukraine, because Trump is directly negotiating with Putin, and Zelensky says that he doesn't know anything about it. He reads it on the press. Although U.S. Secretary of State later on said, well, we will somehow involve also Ukraine and the European Union countries. So first of all, I think this is quite important, whether a deal will be made on the back of Ukraine. And if a deal is made, Ukraine accepted, European countries also accepted it, then there will be serious implications for energy trade, especially oil and gas. And because the European Union, as you know, wanted to phase out all the Russian gas export, including LNG, by 2027. But there was a report in FT saying that European leaders, mostly large European Union member countries, discussed the possibility of having still, again, Russian oil and gas, because the energy price increases kill their competitiveness overall. And some other countries closely aligned to Ukraine, like Poland and others in Eastern Europe, strongly opposed to this suggestion. But it looks that if there is a deal made and there is going to be a breakthrough about the Russian exports to Europe again, whether there is going to be trust there.
Well, let's just look at the big power politics here, regardless of whether who's in the room ultimately. Is there a deal that is easily done, do you think, between Washington and Moscow, that it's literally 5 minutes handshake, or is this even with Trump's bravado still going to be a complicated negotiation, or do you think it will be quite simple if they leave the Ukrainians and the Europeans out of the room? Can they do a deal easily? Do they have that much alignment?
As a diplomat, I can tell you, as a former diplomat, I can tell you that without making the deal in advance, both leaders will not sit on the table. They will probably discuss only 10% of the contentious issues. Therefore, they have to work out a deal before they meet in Saudi Arabia. And in my opinion, it's a package deal. It's about the oil prices, production. It's about what's going to happen in Middle East, Caucasus, relations with China, European Union. So it's going to be a package deal. Russia-Ukraine peace deal is going to be most important one, of course, among them. So I think both leaders being pragmatic and have a personal chemistry, I believe that a solution will emerge from this meeting. Otherwise, they will not sit on the table because it will be an embarrassment.
Let's go to China, where people don't get embarrassed and just enjoy beautiful backdrops with amazing looking ports behind you there, Victor. Victor Yang. Good morning, Victor Yang, senior analyst at the JLC Network Technology. Victor, there's a lot to talk about, but I wanted to start with the sort of front page headline, really. I mean, it's top story in Bloomberg that the Chinese leader is hosting a summit with Jack Ma and the other private sector leaders. That is making news because it's only seems like not long ago that he was pushing them all to the sidelines and even threatening them, not threatening them, but ultimately curtailing their growth potential. Your thoughts on how we should interpret Xi Jinping's outreach now to the sort of entrepreneurial leaders in China?
Well, to be honest, I do not see as a headline here in China. Well, I mean, the one you talk about, Xi Jinping's meeting with Jack Ma and others, it's not making any headlines here in China. And I actually do not know much about what they talked about, to be honest. Well, but for me,
but you do know that a few years ago the opposite happened. right? That Jack Ma and the Chinese entrepreneurs, that their wings were clipped.
Well,
That was seen as a kind of a decisive moment in the journey of China in recent years.
well, as you may know, in China, capital does not call the shot, and China will not allow an enterprise to be so strong that to gain profit without taking care of the people, or just not not following the regulations or so whatever, such as Gemma's new company, and it was not allowed. This is because China will not allow such well not just a monopoly, but it's very, very powerful. And China will not let the
Well, we're
influence the
seeing
country.
what
Yeah.
it looks like in America now, right? The most
Yeah.
powerful CEO is essentially the second president, it would appear at the moment in China. He's literally in the White House, in the
Yes.
Oval Office. That's clearly not a policy that China would follow.
Yes, right. And China would avoid this from happening in China. But at the same time, it would encourage the development of private companies to make sure that they are playing in a level field together with state-owned companies. So there have been some measures rolled out in the past year also to encourage the development of the private companies to make it easier for them to compete. Yeah,
Should
that's
we
for
see
sure.
this? Should we see this, do you think, as part of the stimulus package program that has been going on now for a number of months? The Chinese government has been trying to, if you like, stimulate the economy back into a more dynamic action, that engaging with the private sector entrepreneurs is part of that policy, do you think?
Well, to stimulate the country's economy, China has been, and we always will encourage development of private companies. But at the same time, if you curtail the development of such companies as Genmax, because in some sectors, it will not allow private companies to take control and to get out of its control. So this has been the same in the past decades, not just recently. And on the one hand, it encouraged the development of private companies to develop properly. But on the other hand, it will not allow any companies to be so powerful to influence the politics. Yes.
Well, that's probably pretty wise, because we're seeing the opposite of that now in the Western economies, and the power of the Silicon Valley in particular is certainly soaring. Omar, as we sort of move into the second half of the first quarter here, are you identifying any particular trend where this energy markets are going this year? Is there anything that is giving you, okay, once that happens, then the pathway is forward? Where is the direction of travel going to come from for these energy markets?
Look, I think if you removed Trump and him saying, we're going to push oil prices down, all this kind of stuff, I think this market wants to go higher. It's been sitting at, there's support below the market at $70 for Brent. And it just refuses to break that, but it's also refusing to rally. So I think, the market is extremely interesting. I think that, as Mehmet was saying, you're going to have a big bug, and Russia's not going to talk to the US about Ukraine because there's nothing to talk about. Ukraine is lost, and that's it. So they want to talk about other stuff, how we divide
So
up.
if you take that sort of view here, that would look at what's emerging now, 6 weeks in or a month into the Trump administration, we were just saying a week ago how quiet the sort of Russia-Ukraine portfolio was. Now it's obviously the opposite of that. Only a week later, that if indeed this war in Ukraine and war in Gaza will be brought to an end, is that a breakthrough of bearish or bullish pathway forward, do you think, for the oil markets?
Well, I mean, Gaza has nothing to do with bearish or bullish, but I think it's to do with the loss of American power, right? So you heard Trump say that we're going to crush them and destroy them and all hell and whatever. And what happened? They moved on, or they're going to move on to phase two. It's very simple. To do with Ukraine, the US has lost the war, NATO has lost the war, the EU has lost the war. The only question now is, I mean, you know, the reason the US excluded the EU is because they don't want them to mess up the deal. So they're out of the way. Ukraine is out of the way. They're not going to talk to them because Ukraine is not a sovereign country, right? Without US arms and money, it's nothing. It's dead. It's gone. So
well, there's a lot of countries that fall into that camp. Mehmet, looking at the situation you mentioned it, and Omar referenced it there, that perhaps that Ukraine isn't that important, and that for Trump and for the United States government, it's a possible piece in a bigger pie to negotiate. You mentioned a whole list of issues there, connecting all of these things together, the Middle East with Ukraine, with Central Asia. I mean, one of the things Trump did say early in his presidency was to pressure Russia to break a divorce between Russia and China. That could that be part of this so-called deal? Where do you think all these dots connect?
Actually, this was from the very beginning Trump's intention. It was his intention. You remember in the first term of Trump, he came up with this idea and he pushed it forward, but he couldn't go further because of the deep state in the United States not wanting that. And now he has a more secure seat in White House and self-confident. And he wants to push through this because he sees China as the main threat. And if China and Russia works together, I don't think that West, especially US, could deal with this effectively. So his intention is, because he also knows the differences between Russia and China. They don't like each other much, but there's a marriage of convenience against the West. Now, if Russia could be gradually divorced from China, it cannot do it overall suddenly, because there are so many links between the two. And this will be a gain for Trump. Then he can focus more and more on China, isolated China, internationally as well. Whether it's going to work or not, it depends on how the chemistry will go between Trump and Putin. And in my opinion, it won't be easy. China always has a long-term thinking and will never trust US or European countries. Therefore, it will have its own priorities and confidential relationship with neighboring countries, including Russia.
Victor, back at the basis of global oil flows and energy flows, and how critical China is to the oil markets for the last 30 years. As we've been saying, this is the first year we start where China is not the cornerstone of global oil demand growth forecast for the year ahead. It may still maintain. Give us a sense of where you think China's going now, 6 weeks, 7 weeks into the year. Will it be a flat year? Will it surprise on the up or the downside? Where do you see oil demand and oil imports in particular for China this year?
Well, we expect modest growth in the country's demand in 2025. And as one of the headlines said, well, the property market is now not like in 2024, it's not declining that much. It's now tending to stabilize. And this can help to stabilize gas oil demand, and which is really important in crude oil demand, because last year China's gas oil demand plunged mainly because of the property market. And now it's already 6-7 weeks in the new year. And on the one hand, we see a plunge, a decline in independent refinery runs because of high cost, the sanctions on well, the new sanctions on Russian oil and so on, independence cost had gone up quite significantly. And so they had cut their operating rates to, I mean, conventional independent refiners in Shandong had cut the operating rates to over 2-year low at the moment. But on the other hand, state-owned refiners have boosted their operating rates to make up for the loss. So for the coming months, we are waiting to find out how the sanctions will evolve and how the costs will change for independent refiners. Because when the sanctions are not removed and when Shandong is cautious about taking sanctioned vessels, the cost for independence will stay high, and this would curtail their operating rate.
Will they be sensitive to the sanctions, or are they more sensitive to the ultimate price of oil? I mean, which is more a more determining factor on their import levels?
Well, for independents, they're more sensitive to the price. But as you may know, early this year, the Shandong Port Group, was heard to announce a notice about rejecting sanctioned vessels at its ports. So this has caused trouble for for independent refiners' feedstock arrivals. So now the cost had gone up basically compared with late last year. And now the operating result has dropped quite significantly.
Let's go to the survey question, which is looking at the opening question this morning. What is likely to have the biggest impact on the direction of oil markets through the end of Q1? We are waiting for OPEC Plus supply policy for the second quarter for them to announce whether they are going to go ahead with their planned increases from April 1st. To the geopolitics of everything, Ukraine and Gaza, obviously front and center there. Iran sanctions, the maximum pressure from the US for China demand outlook. What is likely to have the biggest impact on the direction of oil markets through the end of Q1, which has been most of Q1 up till now has been sort of give or take locked around $75 on Brent. But what is likely to have the biggest impact on the direction of markets through the end of the first quarter? Omar, picking up on some of the sort of financials that you mentioned earlier, the strength or the weakness of the direction of travel of the dollar and the other sort of financial markets, what impact the Fed now seem to the bond markets are telling us their expectations are quite low for further rate cuts this year. Where you see the financial markets, the currency markets, and what do they tell us perhaps about the macro picture and the direction for energy? Sorry, you're on mute, Omar.
Yeah, so I think basically the dollar's going to fall. So other currencies, euro and GBP, are going to rise against it. All other currencies, but the dollar's going to fall. You can't. I mean, if you have a massive debt, then the way that you get rid of it is either you work really hard and you make the money, which is impossible. It's like 36 trillion. And the US basically this year, in the first couple of months of this year, spent 15% more than last year. And the US government of Trump, the one that says, Doge and we're going to cut and all this kind of stuff, they're on a trajectory, according to the US Budget Office, to run a deficit of $2.5 trillion, right? Last year was like 2. Okay, so you got to basically be careful what they show you, and what's really going on. So US dollar is going to fall. If you look at the S&P and you plot inflation against that, the S&P goes up by the rate of inflation. So it doesn't matter what they say, we're going to cut, we're not going to cut, we're going to do this, strong, weak, whatever it is. As long as demand is there, which is what you saw last week, S&P is going to go up, so new all-time highs. The rest of the market similarly, with inflation, asset prices, not necessarily the price of eggs, but the price of a house or the price of a rare painting or the price of a whatever is also going to go up. So,
And does that represent actually, does that equal GDP growth? And so
Yeah.
more energy demand, or is it just more liquidity, inflated liquidity?
No, I mean, GDP is a measure of how much you spend in the US, which is a really financialized
Yeah, but if a
market.
dozen
So
eggs are $20 as compared to $5, it's
GDP
not
goes up.
exactly GDP. The GDP
GD
picks up.
goes up. Yeah. The GDP picks up.
They still only
that's
have
the
6 eggs produced.
Yeah, exactly. I mean, it's brilliant. I love the way that they measure stuff. You know, everything is rosy, everything is going up, blah, blah. But the real demand basically is going to come from the East, is going to come from China, is going to come from these places. So you're going to have, I think, massive stimulus come out of China. And the stuff that they're making, you know, AI, all this kind of stuff is going to lead to productivity growth, whatever. And the demand for, I mean, you know, if you look at oil prices, if you look at fundamentally, if you look at oil prices, they haven't been this cheap since, I don't know, the 1970s, right? In real terms, you know, WTI trading at $70 plus or minus. In real terms, in real US dollar prices, you know, adjusted for inflation, blah, blah, blah. It's cheap, cheap, cheap. So what's that telling you is oil prices don't reflect you know, supply, demand, whatever you have, blah, blah, blah. They reflect financial flows and they reflect geopolitics. And right now, they need lower prices, because if oil prices start to pick up, then, you know, inflation is just going to absolutely bloody roof. So I think, yeah, go ahead.
Mohammed, I wanted to get your thoughts on, again, another big item over the weekend, any other weekend in the history of time, it would have been the biggest headlines in the world, and that is essentially confirmation from the Foreign Secretary, the Secretary of State of the United States, standing next to the Prime Minister of Israel, and essentially confirming that the US government is now the most right-wing voice in the already most right-wing Israeli government in history. They've essentially right-winged the most extreme voice in the Israeli government, saying things that even the Israeli government cannot say. Yet the energy markets are essentially dormant to this fairly significant inflammatory geopolitical, geostrategic position. Does Turkey believe what the US government is telling us, that the Israeli government is telling us, that they are going to clear 2 million people from Gaza? Well, the oil markets don't seem to believe it.
Well, I don't believe it.
But they keep saying it. They keep saying it.
Yes, they keep saying it. I think it's a plan jointly developed. And Netanyahu, as you remember, after his meeting with Trump in Washington, D.C., said that you are the best U.S. president we ever had. And
he said it again yesterday.
Yes, supporting Israel. That means it puts U.S. out of the game, in my terms, in terms of as a broker, honest broker between Palestinians and the Israelis. And what Trump suggested looks ridiculous to all of us, of course, creating in Gaza the Riviera of the Middle East, where people can come enjoy holiday. And while 2.3 Gazan should be pushed outside this territory to parcels of land in Egypt and Jordan. And first of all, international law-wise, this cannot be done. Morally, historically,
but people are still behaving like there is international law. The international law is dead.
It's dead already.
The U.S. government has sanctioned the International Criminal Court. They're not only the judges and the prosecutors in the court, but their family members. I mean, that's holding on to international law as a defense.
This is the reason why in the Ukraine-Russia deal, he wouldn't care about Ukraine ceding parts of the Ukrainian territory to Russia, whether it's under international law or not. But in the matter of Gaza,
he's going to take Gaza, which is the same thing.
Yes, but I don't think U.S. can take Gaza in terms of they are not going to deploy any military, they said. They are not going to put a penny into that. They want the money to come from the Gulf. And all the countries in the region, you know, Jordan, Egypt, Turkey, Saudi Arabia, expressed their opposition. They said we cannot accept that. And then the people, 2.3 million people there, they don't accept that. How you are going to enforce it? How are you going to
Everybody
make it?
said the same thing for the last 18 months about the Israeli genocide, and everybody stood aside and did nothing. They said how horrible it was, but they didn't do anything about it. And then you would imagine, are they going to do anything about this or just watch it happen? We'll have to see, but I think it's quite serious. That's why I'm sort of
Yes,
punctuating the point.
in practical terms, who is going to put almost $100 billion there to reconstruct it, turn it in the Riviera of the Middle East?
If the Israelis manage to push and exterminate and expel the native population, then they will very happily take that land and put 100 billion and more. Let's go to Victor Yang, last word, because of course, all things energy and Asia. If the appetite, Victor, so we got OPEC supply looking like the biggest impact for the rest of the quarter. Victor, if there is lower throughput in the Chinese refineries, does that mean there's more oil going into Chinese inventories? Are we seeing another build, or you would imagine imports to decline?
Well, we expect more increase in the country's imports and throughput in 2025, mainly because of more demand from the chemical sector. When we look at fuel demand, we do not expect significant growth anymore. Say jet fuel is growing modestly, but gasoline is flattening out. And for diesel, we just expect it to be largely stable, to decline slightly in 2025, actually. So basically, we're looking at the chemical sector to drive up demand. And we expect modest rebound from 2024.
What about just a quick follow-up, Victor, with the price of natural gas being so high at the moment, is that likely to trigger any switching in China away from gas to fossil fuels, to oil, to fuel oil? Your thoughts?
Well, yes, when we slow down the switch to gas when prices are too high. For instance, in the first 6 months of 2024, there was a lot of switch from diesel powered trucks to natural gas powered trucks, to LNG powered trucks. But the switch slowed down in the second half of the year because of higher gas prices. When the price ratio of LNG to diesel was too high, say about 70%, 80%, well, the process slowed down, yes.
Okay, well, we're going to have to leave it there. Where will Chinese demand go? Where will OPEC go? These are questions we will see in the coming weeks. But this week, we will see the first sit down on a peace settlement and a deal on the Ukraine war. It would appear that has to be a good thing for those poor people who have suffered under the bombs for the last 3 years, the third anniversary of the Ukraine war coming up. All of the geostrategic noise around that, of course, is vitally important to so many countries and so many people. But for those who are literally under the bombs of this terrible war for 3 years, you'd hope that this might bring them some peace. And that alone is somehow a positive. Thank you, Mehmet Oguchu. Really appreciate you joining us today. Sorry, we're going to miss you in London next week at the IE Week. Victor Yang as well. We will miss you. I don't believe you're going to get to London this year.
No, not this year. Not
this year. Omar Najia, as always, Monday morning isn't the same without you. Thank you, sir. Have a great week, everybody. Oil prices trading $75 on Brent.